Welcome back, focused learners. Today's explainer is diving right into what is arguably the most fascinating transformation happening in enterprise software right now. We are decoding ServiceNow. Under the leadership of Chairman and CEO Bill McDermott, this company has fundamentally shifted gears. They've evolved way beyond their roots as a standard IT service management provider for their 7,700 global enterprise clients. Instead, they're aggressively building out a comprehensive, enterprise-wide AI platform. And today, we're going to unpack exactly how that massive transformation is showing up in their Q2 2026 earnings.
Quick heads up before we get into the weeds, though. This explainer is strictly for informational and educational purposes. It doesn't constitute financial advice or investment recommendations. Always make sure to consult a qualified financial advisor before you make any investment decisions. Okay, let's dive into our roadmap. We're keeping it highly structured today. First, the what. The raw Q2 2026 results. Second, the why, uncovering the AI engine that's actually driving these numbers. Third, the what's next, looking at how the stock is trading and what the analysts are saying. And finally, Section 4, the risks and the market reality. All right, let's kick things off with Section 1, the what, the Q2 2026 results. Zooming right in on the corporate data reported on July 22, 2026, $3.99 billion. That is a massive total revenue number for the second quarter. It represents a 24% year-over-year increase, and crucially, it totally surpassed Wall Street's consensus estimate by 1.65%. To give you a bit more color on this, their core business, the subscription revenue, hit $3.877 billion. That is a 24.5% jump year-over-year. And they didn't just crush it on top-line revenue either. They delivered a highly efficient quarter on the bottom line. Adjusted earnings per share came in at 90 cents, which is a really solid 11.1% year-over-year beat against the Analyst Consensus of 86 cents. But hey, to truly understand an enterprise software company, you have to look at the pipeline, right? Which brings us to $29 billion. This is their remaining performance obligations, or RPO. It's a critical metric because it measures future revenue that is already locked under contract. Sitting at $29 billion means they saw a 21% year-over-year jump in guaranteed future business.
So here's the takeaway. When you have a comprehensive beat across revenue, earnings, and future obligations, management gets confident. And that's exactly what played out. ServiceNow raised its full-year 2026 subscription revenue guidance to a range of $15.76 to $15.78 billion. That implies an incredibly healthy 21% constant currency growth for the entire year.
Which brings us right into Section 2, the why, the AI engine. You really have to ask yourself, in a fiercely competitive market with giants like Salesforce and Microsoft breathing down everyone's necks, why is ServiceNow exploding like this? Well, here is your answer. During Q2, their AI annual contract value, or ACV, crossed the $1 billion mark for the very first time in company history. That is a massive psychological and financial milestone, and management is absolutely keeping their foot on the gas, targeting $1.5 billion in AI ACV by the end of 2026. Just to grasp the sheer velocity of this adoption, listen to this staggering quote from CEO Bill McDermott. He noted that agentic deployments of their AI software increased ninefold over just 9 months. 9 times. That incredible momentum helped drive 123 deals in the quarter that were each worth over $1 million in net new annual contract value. That specific million-dollar deal metric, it's up 40% year-over-year.
The strategy fueling all this growth was actually laid out perfectly back at their Knowledge 2026 event in May. It comes down to 2 major initiatives. On one side, you have an expanded partnership with NVIDIA to deliver governed, autonomous AI agents. And on the flip side, you have something called Action Fabric. This is an open architecture that lets ServiceNow's full platform integrate with both their own AI agents and external ones, even ones built by competitors. Basically, this positions ServiceNow as the essential governance layer for enterprise AI, not just some random app provider trying to sell you a standalone tool.
And the craziest part is management's ambitious goal for 2030. They want AI to contribute a massive 30% of their total annual contract value. So they are fundamentally restructuring their entire revenue mix toward AI over the next 4 years.
Moving right along to Section 3, the what's next, stock and analyst.
Let's zoom out from the corporate data for a second to look at the macro market reality and see how the stock is actually trading. As of late August 2026, with shares hovering right around $128, there is a serious narrative tension in the market. The short-term momentum is remarkable. The stock has had an incredibly strong month, up 21.5%, and over a 3-month period, it gained an impressive 33.8%. Technically speaking, it's trading above its 20-day, 50-day, and 200-day moving averages, but the long-term drag tells a totally different story. Over the past year, the stock is still down 26.6% and down 15.3% year-to-date. Plus, the 50-day average is still sitting below the 200-day, signaling that the broader downtrend might not be totally in the rearview mirror just yet.
So what is Wall Street thinking? Well, the consensus is broadly positive. S&P Global polled 49 analysts and came up with a strong buy consensus with an average target of $142.23. MarketBeat is showing a moderate buy at $144.24, and eToro aggregates 22 analysts for a strong buy at $145.57. Across the board, these targets are implying a really nice double-digit upside from that $128 price level.
We've also seen some pretty notable upgrades recently. On August 19th, Bank of America analyst Tal Liani bumped his price target from $130 to $150. What's really fascinating is his reasoning. He cited broad-based software sector multiple expansion, improving growth, and specifically, easing concerns that AI would disrupt traditional enterprise software businesses. We also saw Wells Fargo raise its target to $175, while firms like Evercore ISI, TD Cowen, and Canaccord Genuity are maintaining targets ranging anywhere from $140 to $160.
Now, if you check out Guru Focus's GF value metric, it suggests an even more bullish scenario. Based on their models, they estimate ServiceNow's intrinsic value at $237.70. That would literally mean the stock is currently 46% undervalued.
But let's be real, this creates a picture of massive dispersion on Wall Street. Because while the averages look great, not everyone is drinking the Kool-Aid. The price targets out there range from a bearish low of $72 all the way up to a highly bullish $248. There is a wide range of views on how exactly this AI transition is going to play out for the stock.
And that leads us perfectly into Section 4, the risks and the conclusion.
Look, we've explored some unbelievable growth metrics today, but to really learn, we have to look at the complete picture. Let's get a sobering dose of market reality. Using the rule of 4, here are the key risks you absolutely need to understand. First, despite this recent rally, the stock remains 39% below its 52-week high of $209.59. Second, that AI narrative? It's a double-edged sword. There are lingering fears that autonomous AI agents might reduce the need for traditional per-user software licenses, which could pressure their whole pricing model. Third is valuation. The stock trades at roughly 80 times trailing earnings. Now, yes, that is well below its 5-year median of 137 times, but an 80 times PE is still undeniably elevated on an absolute basis. Finally, insider selling. Disclosed in an SEC filing on August 19th, CEO Bill McDermott exercised 4,160 restricted stock units and sold 2,236 shares. Now, while this appears to be purely to cover tax obligations, any insider selling always warrants attention.
Which leaves us with one final provocative thought. As ServiceNow races past that $1 billion AI milestone and completely reinvents itself as the enterprise governance layer, the ultimate question remains, will AI ultimately disrupt the traditional enterprise software model, or is ServiceNow actively building the essential platform required to safely scale it? That is the narrative you need to be watching. Thank you so much for joining me today. If you value this kind of clear, structured market insight, make sure you subscribe, and I will see you in the next explainer.